estimate. First, minimum amount of tax estimate. Subsection 207C bracket 2 of the ITA provide that the minimum amount of the tax estimate for a year of assessment should not less than 55% of the amount of the amendments. Company, trust body, cooperative and LLP that have started operation can determine the estimate tax payable for the first year of assessment according to the company's estimate profit. Second, amendment of estimate tax payable from CP 204A. Company, cooperative, trust body and LLP are allowed to amend the tax estimate payable by submitted ECPA 204A. Form CP 204A for a year assessment can be amended in the exit that may be selected starting for the 5th or 6th installment or 9 months that can be selected starting for the 8th or 9th installment or both in the basic period for a year of assessment.
To continue, for existing company, the estimate tax payable has to be paid in equal monthly installment beginning from the second month of the basic period for a year of assessment. And for a new company, installment payment will commence in the 6th month of the basic period for the year of assessment, payable in the 6th month after the company commenced operation. All companies are required to pay their monthly installment by the 5th day of each month. After the actual tax payable of a company been assessed, the balance of tax payable, if any, after deducting total installment paid on the tax estimate, must be paid within 7 months from the close of the accounting period or the last day of any allowed attention period.
Next, revision of tax estimate. All the businesses are allowed to revise their income tax estimate if discover any omission or wrong statement in 11th month of basis period before 31 October. As per section 1395 of Income Tax Act, an assess can be filed a revised return by 31 December, 3 months before the end of the relevant assessment year or before the completion of assessment, whichever is earlier.
Submissions of tax return form and payment. The due date for submitting the return form and paying any tax or balance of tax payable is 7 months from the close of the company's accounting period. According to the Income Tax Act 1967, companies must comply with several requirements. First, companies are required to submit their tax return electronically. Submission of the return form can be done through the e-filing system. Additionally, companies must declare their income in the return form based on financial statement prepared. Furthermore, the company is obligated to furnish accurate details in the return form. Failure to submit the return by the due date may result in actions under Section 112. Additionally, if the tax or balance of tax payable is not settled by the submission deadline, an increase in the tax of 10% will be imposed under subsection 103, Clause 2. Amendment of written actions. First, in the event of an error on the form, corrections of any error made on form submitted manually or online can be made by writing a letter detailing the mistake made and enclosed documents, purchase receipt or invoices to support your applications. The letter and supporting documents must be submitted to the Hasil office that handles tax files or through the customer feedback portal. Amendment within 6 months from due date for submissions of form. The taxpayer is allowed to make self-amendment on information or assessments in the income tax return form ITRF submitted to Hasil office on time by submitting an amendment return form within 6 months from the due date of submission of ITRF. Only taxpayers who have submitted the ITRF on time are allowed to make self-amendment, and self-amendment is allowed only once for each year of assessment. The taxpayer is allowed to make self-amendment on information or assessment to correct mistakes in the ITRF relating to: first, income under declare or not declare; second, expenses or other claims over claim; third, capital allowance or incentive or relief over claim.
Final payment of income tax have a 6 item, which is the first one is submission deadline. For the individual with employment income, the due date to submit the tax return and make the final payment is 30th April, while the individual with business income, the due date is 30th June of the following year. The next one is filing the tax return. You must declare your total annual income and deduction in the tax return. The third one is payment of final tax. After submitting your tax return, you will either have a balance of tax to pay or a refund due if you overpaid. The fourth one is how to pay. Tax payment can pay by using credit card or debit card or online banking or the others things. The fifth one is late payment penalty. If you fail to make your payment by the deadline, the penalty of a 10% amount remains unpaid after 60 days and 5% penalty may be added. And the last one is MTD, which is monthly tax deduction. Employee usually pay their tax through MTD and the final payment is the balance after subtracting this deduction.